Okay, welcome, and thank you for joining us today. Wanted to, I guess, the intro, we're going to speak today about fraud. And I want to give you, sorry, is this on? Okay, I'll keep speaking.
Hopefully it's on.
Okay, great, thank you. Wanted to take, first thing we'll do is a poll, and then we'll go into the introduction. So the question is, who in the room has personally fallen victim to a financial scam or other financial fraud attempt? And you have a number of different answers to respond to. In most cases, a lot of people. I know I have, and I know most likely our panelists have as well. So as we're doing that, what I want to do is introduce myself. I'm, again, SVP of Faster Payments with Alacrity. I started my career in banking, worked at JPMC, Citi, SunTrust, and TD in the areas of digital banking or digital payments product creation. Then went on to the clearinghouse, where I was part of the team that launched the RTP network. So we designed it, we launched it, and developed it along the way. Did a stint at FIS and now at Alacrity for 4 years. So, Bobby, if you could kind of give us a little bit of information about your background.
Certainly. Bobby Shields Farley, PNC. 30 years in electronic payments. I started at ABN AMRO in Chicago. Did a stint at the office in Jersey City behind us. And then I also spent a good stint at the United Nations Federal Credit Union. Absolutely fascinating. And then I've been at PNC, it'll be 11 years. I've done, as I mentioned, all payments, operations, product development, the whole gamut. So I am eminently practical.
Okay, Steve?
Good morning, folks. Steve Bernstein. Pretty boring. I've just been at the bank about 41 years. So I started when I was 6. But I've covered a lot of territory, mostly in payments, and we obviously have many illustrious alumni that come and go, but I've been fortunate to be at the bank for a good length of time.
Great, thank you, Steve. What I wanted to do was go directly, in the interest of time, we'll go into the questions, but I wanted to give you a little bit of information about where these questions came from. On a day-to-day basis, I interact with a lot of financial institutions, banks, and credit unions. We oftentimes get questions about fraud. That's an important topic. So that's where these questions came from. So these are actual questions from banks and credit unions. And so I thought we might share that with you today. So starting with Steve, the question is, and this is about ISO 20022. We're hearing a lot about it. But the question is, does ISO 20022 augment the ability to detect and remediate fraud in instant payments? Your perspective.
I would say, in a way, yes, because I think the last panel focused on the fact, debating whether ISO organically has more information in its tags, and it does. So the more information you have, there's more potential to potentially pause a payment, which can be a double-edged sword because FIs and fraud mitigation networks sort of have to balance the fact that you want to do your day-to-day, banks want to do their day-to-day. How do you balance speed versus pause or stop? And as such, there are many delineations, whether it be dollar value, the differential between the last payment and the current payment, that go beyond ISO 20022. RTP is organically ISO-centric. The network for wires moved to ISO last year, full compliance. ACH, though, doesn't adhere to ISO, even though we, for example, at JP Morgan, can accept an ISO file. But there are different payment modalities. For example, if you're doing a cross-border payment where OFAC screening is required. So from that perspective, it can be beneficial to leverage ISO because of the payment tags inherent in the record so that you can make a better determination as to whether the payment should proceed or pause.
Thanks, Steve. And Bobby,
Yes.
any perspective?
No, not anything to add.
Okay, I would add one thing, and this is based on what I'm seeing through clients, and that is some people are getting interested in creating 2023. What I mean by that is that they're utilizing certain fields for things that they want to, and rather than the intended use. And that over time is going to create a problem, right? It's going to create a problem for domestic transactions and cross-border transactions eventually. So just putting a warning out there that I'm starting to see a lot of people utilizing empty fields for things that they feel are important to them, and maybe a bank or a credit union that they do a lot of business with. So keeping 2022 pure is important, and the usage of that data is really helpful in preventing fraud. But if you are getting data that you can't use, then that creates a problem. So I just wanted to share that. Next question goes to Bobby. In your opinion, does faster payments equal faster fraud?
Not necessarily. And so being in the middle of it now, I wanted to take a more historical perspective. So I know we've all done a little bit of research around UK Faster and reading some of the findings out of a slightly more mature experience. And a lot of what came out of that really resonates with, I think, the experience that we're having. The payment rail in and of itself is just that. It's a payment rail. What continues to evolve and change are the behaviors around the parties to the transactions and the technology and the speed at which they are moving and making decisions or giving instruction, as opposed to the speed of delivery of the funds. And it matters to me. I think it matters to all of us, right? When Faster Payments first went live in the UK, it was, oh my God, it's full of fraud. Well, it was the same fraud that was happening on other payment rails. It just showed up in that rail because of convergence of a lot of things. And I think that's similar to the experience that I've seen. What is slightly different is how quickly the funds at the end of that fraud event, at the end of that scam where someone's quickly the funds move in the end, but there's a lot that happens and a lot of decisions made and actions taken prior to the final movement.
I think it's probably the most prevalent question. If you're doing an instant payment, what happens if there is fraud, if ostensibly the payment's supposed to be irrevocable? Now, thankfully, we haven't seen the manifestation of fraud in the US to date for RTP. But remember that RTP is still less than 1% of all payments. If you subscribe to the AFP annual fraud study, obviously checks are number one. I actually had finally after a year and a half, I got a FEMA payment for my property in Florida, and I hadn't received it. It turns out somebody intercepted the check and deposited it at another bank. So obviously checks are number one. Yes, they are still a thing in the US, although if you ever stood in line behind a college-age student at a supermarket and you started writing a check, they'd think you were signing an autograph, you were a celebrity. But that being said, RTP is growing like a hockey stick. ACH grows about 7% a year. You've got card payments, debit and credit card, credit push, virtual card. Those payments continue to grow because you have a lot of buy now, pay later companies. You've got digital payments, you've got pre-notes, you have micro deposits, and you have gig workers. So those payments continue to manifest themselves, and as companies look to migrate to lower cost models, you're going to see more RTP, you're going to see more ACH moving away from wire, moving away from card. I think every treasury practitioner views ACH as their best friend because you could disperse, collect, perform a $0 payment or a penny shy of 100 million. So when we look at faster payments, faster fraud, it's important to have the theory of belt and suspenders with regard to how you adjudicate a payment. Certain payment schemes, if you look to Brazil, for example, fraud mitigation is organic to the payment process. In other words, the network itself polices itself against fraud. We don't have that in the US. And I suspect it'll be similar in Canada when they launch RTP in the latter part of this year. But that being said, you're only as good as your traps. And again, balancing the speed versus the pause. So no, we have not seen any type of manifestation of fraud in RTP push. We have seen certain fraud metrics and requests for payment in the US, which is why the network are pivoting toward a combination of Zelle and request for payment starting in the summer of this year. And we could go into more detail about that. But that being said, RTP is really only a blip on the radar with regard to faster fraud. We hope it stays that way, but once the proverbial secret gets out and RTP becomes 5, 10, 15, 20% of all payment types in the US, you could rest assured that there'll be a lot more first-party fraud, account takeover, and false positives that will manifest themselves.
Thanks, Steve. I just wanted to share a story or a good example, because my answer to that question would be, it depends. So when we were at the clearinghouse, we were building RTP. We also looked back at the UK, and we asked some questions about fraud. What they found was, for every fraudulent transaction, it moved throughout the system using real-time payments 8 times within an hour. So this means that those funds were hopped to 8 different financial institutions using the same rail. So that means faster payments, faster fraud, except for one thing. What they did was they built a system that was able to track those 8 hops. And generally what happened was the transactions would go out to 8 different banks, consolidate back, go back out to 8 banks, and consolidate again finally. So they developed a system that was able to track that. The only downside to it was if they switched rails, trail's cold, right? Or what the fraudster is starting to do is move the money out of the country faster. So that's a trend to get away from that system to be able to be tracked. But I know initially when it was done, very effective, even at Bank 8 to retrieve funds. So perfect example of you don't have to have faster fraud if you have tools and analysis in place to identify it and stop it. I'm going to go to the next question in the interest of time, and this goes to Bobby again. If an FI already has a fraud detection and analysis solution for wires and ACH, what, if anything, would you need to add to accommodate instant payments? If I need 2 systems at an enterprise level, should they be integrated?
I'll take your second question first. Yes. From a first question perspective, so we talked already about hopping rails. I would even argue if there is some way to integrate whatever you're doing for checks in the US, probably worth looking at, because those payments are going to hop and they're going to move rails on purpose and deliberately. And so as much information and as much data as you can get within your institution to really know what your customer is doing, what's normal for your customer, is important. To have that visibility, to look at them as your customer, not necessarily just to look at, this is my payment silo that I worry about, and this is the space I operate in, because the world doesn't really operate just in that one space. What was the rest of your question?
Oh, the rest of it was whether you need a different system from wires and ACH.
In my experience, no. Every institution is different, of course, but the ability to integrate shared data, if that is your model, is, I think, very, very important. One of the other things that Steve referenced a little bit in the prior question was, yes, you have to make a deliberate decision relative to fraud screening around how much friction your institution and your clients will tolerate. And you will adjust that over time, guaranteed. So it's, in my opinion, the more information that you can get together, the broader view that you can take of what is happening for your particular client in that moment, in that interaction against everything else that they're doing, is helpful. We also talked about RFPs, so we want to be, there's the credit push part of, yes, it's an instant payment, here you go. 6 seconds later, your beneficiary gets their funds. Coming into this practice now, if it's new for you, keep in mind and consider and treat RFP equally with your credit push transactions to create that holistic view of what is normal in the ecosystem and what is normal for your account holders.
Steve?
The overarching philosophy at JP Morgan is to have, although you'll have contingency and backup, one unified system of everything. So we do have a sanction screening tool, but it covers multiple payment types, including RTP. If you know our chairman at all, I know he's very shy, but the first thing that we do, you're aware we recently acquired First Republic, we had acquired WAMU. Unlike other verticals, and I think because Jamie knew this when he was at Citi, he would get a company that Citi acquired and he was told to break it down to its most minute parts and integrate it as quickly as possible. That, generally speaking, is a recipe for success. Within our fraud or sanction screening tools, we deploy a very similar philosophy, whether it be a wire, an ACH, a check, an RTP, a card payment. And again, there are different delineations between the two, but it's looking at the attributes of each payment. Now, the other element that we could probably spend a whole session on is AI and machine learning. To what extent do we deploy, amongst others, AI within the space for fraud mitigation? And the answer is significantly. If you look at the tools that FIs deploy with AI, the first 3 that we deploy it with are payments. We use it for ACH, we use it for wire, we use it for RTP. How do we use it? Okay, well, the idea is that you want to have straight-through processing that approaches 100%. So using a corrective table, because of the data that you have or can extract, enables not to have a broken payment in the process. So that's important. Secondly, we use it for fraud mitigation. So fraud mitigation, whether it's winnowing down false positives, building a data lake so that you can extract it upon need based on the payment type, is certainly important. The third tool for AI is payment optimization. Because RTP is not ubiquitous yet. We're at, last I saw a couple of weeks ago, we're close to 78% in the US for all bank accounts, even though it's comprised of about 2,000 banks out of the 9,000. What that means is that you're going to have net new counterparties that you may not have seen before as more banks come on the network. But having payment optimization with AI is important. But with regard to fraud, it is a cornerstone. And yes, there will be mistakes made where you pause a payment that maybe you shouldn't have, but that's why it's important to have reciprocal elements or flags so that if you wanted to go through that gate, then you have a mechanism to do that. But I could tell you that we're quite fortunate because we rely upon 15, 20, 25 billion payment elements a year. If you look across all the different payment verticals, ACH, RTP, card, wire, check, all of that data is leveraged so that you can certainly preclude a fraud from occurring. When you add the patina of fraud mitigation through AI, it becomes a very powerful tool that is always morphing. And this thing is morphing every second, every hour, every day. Is it perfect? No. Do we still have fraud? Yes, every bank does. The idea is to stop it from happening, but yet not impact the originator if you can avoid it, because they're not going to be happy about pausing a payment. True story, we had a Fortune 50 client that we paused a $2.3 million payment because our sanction screening tool paused it. We went back to the client and said, what do you think? We don't want to process it unless you give us the head nod. And they said, after a couple hours, they came back and said, thank goodness you paused it. Please kill the payment. By the way, I hate your system. Why? Because it caused them to burn calories to review the payment. Is it right? Is it wrong? So you could be correct in doing all the right things and not be universally loved. So the idea is to, over time, try to perfect that blemish or friction to the point where that customer has the epitome of trust in you making that determination.
It really is about balance.
Yep.
You know? Again, in the interest of time, we're going to be more efficient today. This question to you, Steve. Are there any new regulations coming online in 2026 which may affect how you address fraud detection for instant payments?
Yeah, and that's a key question. NACHA has the most significant rule change, I would say, in the last 7 years that starts March 20th of this year. And it reflects a sea change where the opposition is currently clients or originators or TP3s are required to use commercially reasonable risk assessment metrics solely for web ACH debits. Okay, it's very centered around web debits because they've tended in the past to have a high prevalence of fraud. That is evolving starting on March 20th to requiring the originator to deploy a risk-based approach for any and all ACH payments: credit, debit, consumer, corporate, large dollar, low dollar. A risk-based approach is a higher bar, more stringent bar with regard to the payment flow. It's going to connote greater responsibility upon the originator to perform an annual internal assessment of their risk-based approach and pivot where they've identified any gaps with fraud. And the most frequent question I get on this, because by now we have certain of our clients, their hair is on fire because the rule is only a month or so away. And they'll say, well, what if I do nothing? What if I take the same approach I have today? The answer is maybe nothing happens, but I can also tell you month over month, we look at the dollar value of not your rule fines that our clients receive. Some months it exceeds over $100,000. So if you do nothing and you have a particular issue occur where you have a spate of unauthorized debits, for example, and the receiving bank flags a rules violation, the worst thing that you could say is, look, we already did our budget for the year. We can't look at this for another 5 months. You will be fined, and that fine will increase until that mitigation has occurred. If, on the other hand, you say, I get the joke, we'll have something in place in the next 30 days, very unlikely that you will be fined. So, again, I don't want to underplay the significance of this rule for USACH, but it's one example of where the regulations are kicking in. There are also others that expand the use of Zelle within the network, as well as RTP. And we could go into greater detail on that at another juncture.
Bobby, do you have anything to add?
No.
Okay.
Very thorough.
Steve, you did a good job then. Bobby, this one's for you. Myth or reality? So it's a more fun question. We're hearing a great deal about FIs not needing fraud detection solutions for receive-only instant payment transactions. Myth or fraud?
Myth.
Or myth or fraud. Myth or reality?
Leading the witness. Myth.
Yeah.
Myth. And even for a minor technicality, if your institution has any plans in particular of expanding Zelle settlement over RTP, it's very small, exclusive community right now, but if you're thinking about that, it's required that you screen for fraud for incoming transactions in that particular construct. And I would say not just payments, again, RFPs. Anywhere that you can try to get information, intercede, ensure that everything is on the up and up is beyond prudent.
Steve, anything?
Oh, looking at the question that we have here as well, taking into account the question that on hand. So fraud is an issue. Now, we have this little thing called Reg E that for consumers, the idea is to protect the consumer against fraud. So ostensibly at 60 days, anyone here as an individual can contest an unauthorized debit, or they revoke the authorization, or even if it's a one-time revocation because you agreed to $100, it came in for $120. You have the right to do that. On the commercial side, it's a little bit more prescribed, but it's ostensibly 24 to 48 hours. But if there's a fraud, how do you recover those funds? Now, there's also another thing in the network called a warranty. And basically, a little known fact is that within USACH, you basically have a 2-year warranty from the settlement date of the entry. So again, this is a balance. How do you recover funds? And I had a conversation with a chairwoman of Notch about this last year. Is the answer to aggregate different bona fides in your authorization? In other words, typically you've got, in the UK they call it a mandate, and the bank holds the mandate. In the US, you have an authorization. What do you ask for? Typically you tick the box that says, I hereby read the rules and will be in place until such time as I undo that authorization. So my proposal is that you have at least 3 mechanisms of authorization so that it becomes more of an airtight mechanism for in the event that there is a dispute, that you have the evidence to go back to the receiving bank. Is it a selfie that we're all familiar with at the airport that it does a retinal scan? Is it a geographic location? I made this authorization from my den right after I watched the Super Bowl on Sunday. Therefore, unless you had an unwanted stranger that was able to log in, it's ironclad. And then you've got an IP address. So the idea of an accretive authorization that would improve the funds recovery process is one that I would recommend that we collectively petition NACHA about, even in observation of Reg E. Because what happens is, if you're in the brokerage industry, you've got buyer's remorse. If you're in the insurance industry, you've got a premium. If you've got a phone bill, you have a monthly debit that changes from month to month, but you have a standing authorization. Same with utility bill. Now, I hear a lot of complaints that somebody revoked the last 12 months worth of payments. Why do they have to pay the bank? Why can't I recover it? Because they know it's a fraud. The issue is, how do you absolutely know it's a fraud? Because it's in the eye of the beholder. If there was an account takeover, were you in a position to prevent the account takeover? So those are some of the tools that we need to look at going forward, because every payment network is imperfect. And as we mentioned earlier, request for payment took a pause. So what is launching later in the year again is a combination of Zelle and request for payment, where a Zelle authorized user receives a request from their company. Let's say it's a brokerage, and you want to invest $1,000 so you could buy crypto, or you could buy a particular stock or a mutual fund. You need to be a Zelle user, and then it's still going to pause when it gets to the bank, because you have to log in with your credentials. That's known as friction, by the way. And I also think we need to change the mandate where the consumer tells their bank for a request for payment, if I have a sufficient balance in my account for this particular originator or requester, for the next year, if I have that balance, just push the funds. I don't want to have to stop and log in, because that creates undue friction. And again, you've got to balance friction, because that's perceived as a mitigant against that risk. But you do have to balance that with the nature of the payment.
You also have to balance that with, do you essentially, as the financial provider, want to be the mandate holder?
Right.
Right.
Yeah.
And then managing expirations of mandates, those kinds of things. Yeah.
I think we'll go, with the time we have left, we'll go over the two questions we have, and then we have one more question for the panel. First one is, are there any steps the industry can take to improve the funds recovery process after a fraud takes place? And I'll just opine on it in the sense that that's why there is a message within RTP, also within FedNow, that is a request for return of funds. Within that message, you can give more information about the details about your question about the transaction, whether it was fraudulent or not, and that starts the process in terms of arranging the funds recovery. We designed it because what we heard from banks was, we basically asked them before we designed it and said, how do you deal with this? And they basically said, we call the other bank, they think about it, they call us back. And we thought that maybe in the 21st century wasn't the great way to do it. So we created the request for return of funds to accommodate it.
Those phone calls still happen.
All right.
Pretty regularly. Yeah, it's collaboration. I think when it comes to recovery of funds, yes, the request for return is helpful, a lot of those payments hop rails. I mean, just a lot of things happen that slow things down, and I think it's a legacy of picking up the way that you handled recovery of a wire transfer, domestic or otherwise, and applying the same thing to RTP. Some of it's going to be maturation, some of it, I'm adorable, I know, but a little collaboration, and how to solve for something like that would be very welcome for those of us in the trenches. Like, I don't want to send out RFRs now and have my payment, have, an RTP, then come back via chips.
Yeah.
You're trying to correlate things, it makes it very complicated.
This is another good question. Do you believe we need more regulation for AI, especially since fraudsters are using their own AI to bypass security measures? I'll just give my opinion, and you guys can jump in as well. So yes, but the thing that concerns me most is are the regulations going to apply to a fraudster who was probably going to bypass them? But
Well, I think that
Bobby?
should there be more regulation? I think it depends, right? Because we could do a minute video, as one of our vice chairmen did, and somebody created his own persona based on that 1 minute. So they could act, walk, talk, have the same cadence from that 1 minute video to do anything. Could create a phone call, et cetera. So theoretically, yes, but how do you even know that it was initiated through AI? I'm not sure you would even know. We're now, I would say if you rolled back the clock a year ago, the industry was headed for more overhang with regard to regulatory oversight. Now we're in a mode of letting the market dictate itself. So I think it's going to take some time. If you look globally, I mean, there are other sectors of the world. You look at China, India, Philippines, Brazil, UK, where AI is used even in a more advanced way than we are, sometimes for positive and not so positive results. But I think we need to maintain the focus and manifest where the fraud occurred, and then go backward to see what we can do to maybe fill in that gap that did occur.
Okay, thank you. In the last minutes that we have, we're going to do a lightning round on the last question. So, Bobby, you can start. Basically, any advice for anyone planning a new integration of instant payments in 2026?
So we talked about, ensuring that you're using a good amount of data, think holistically. But the other thing that I would strongly suggest is take advantage of the opportunities to interact with the network, to interact with user groups, forum, et cetera, within those networks. You're going to get a lot of experience. There's still some, my fraud mitigation is better than your fraud mitigation as a competitive edge, but there is room for collaboration. And I think there's been understanding, the penny is dropping, that we all have to be on the same side and work together to stop these things. It's not really a differentiator if it's going to hit everybody. And no matter, you could be the one saying no now, but you're going to need someone's help 2 weeks later. That would be my advice.
Steve?
I would say you want to look from cradle to grave within the payment process, and you need to develop 100 to 200 questions that have to be addressed about hygiene, adjudication, recovery, contingency, speed, the customer experience, what can go right, what can go wrong. You really need to take a 360 look at all the elements, whether it be the API approach. Within real-time payments, we support API, portals, and host-to-host. Initially, we only supported API, but there are certain originators that don't have the wherewithal to do that. So do you make them come to you or do you go to them? And you really need to go to the customer. So it's taking a 360 view of all the risk mitigants, the positives, what can go wrong. By the way, there's one thing you also need to be aware of with real-time payment. You need to hold liquidity or capital with the Fed or the clearinghouse over a weekend. There's some weekends where we hold billions because these are irrevocable 24/7 payments. That is not something for the weak of heart because there are certain areas or climates where RTP, if there's an issuance of a new token, for example, investors are going to rush to it. And you need to be able to fund that to keep the engine running. You don't want to stop up the liquidity. Again, that's just one of hundreds of manifestations of questions that you should have.
Okay, thank you. I'll just follow up. Everything that they said was correct, and I will add balance. Think about the fact that you may be doing transactions for the first time 24/7, so look at it from an operations perspective. Also, education. Educate not only the people within the financial institution, but outside of it, i.e. your customers. Very important. So with that, I want to thank everyone for joining us today, and thanks for the panel as well.